Hello, everybody.
Hey.
And we're live.
We are live. We're super live. So, welcome back to welcome back to Crypto Talks. I'm Phil. This is this is John. That's Rob. Um, and today we're going to talk about I guess what it actually is. This discussion is actually about what might happen with the macro perspective as these new European regulatory framework comes into power for the European Union. And like we've got the paperwork that we've been able to find about it, but we just discussed. We think we've found the proposal for it, for the framework, and we've been looking around as much as we can over the course of a couple of weeks. I guess at least I have, to understand more what it is, because it effectively hits me because I'm in Sweden, which is part of the European Union. John, you're in the States. Rob, you're in the UK. So it's not. I don't think it's going to directly hit any of you guys in terms of how if you wanted to create a token or a project, but it will hit you
directly.
Yeah.
It hits directly in terms of the EU being a kind of leader on regulation and
yes,
setting the standard, which if you can deal with the EU, then you can deal with pretty much anyone, because they set the gold standard.
This is also a very big potential for some of the United States companies that are having issues with the SEC to potentially find some regulatory clarity and potentially even move out of country. So this could drastically affect certain markets within the US as well.
For sure. There's been a lot of discussions from this thing is not really blown up that much in terms of discussing what it all means, which is, I guess, one of the reasons why we're talking about it, because we want to get the information out there. But the discussion that's been going is the way it will kind of impact the United States as well, because when you get all this framework set up and all the regulations are there and the clarity is there, that means that a lot of companies and entities and, I guess, hedge funds and pension funds and all these are going to be able to actually create a product that they can then sell to their customers, which is going to be huge for the European market specifically, because that means that a lot of companies will get a huge head start, much as like a lot of other smaller countries that have gone for, like, I mean, look at El Salvador. Like, they're certainly way ahead, in terms of adopting Bitcoin as a legal tender, because it is already a legal tender there.
That's very true.
And the discussion is barely even going on anywhere else.
Yeah, but they do have to take on the negative connotation of that as well as the positive. The fact that they are, essentially backing a section of their economy with something which is so volatile in nature, then purely from a financial risk standpoint, they are an increased credit risk. That's just
sure. But at least I think people are kind of overplaying how hard they actually went into it. Yeah, they made a legal tender, but the government itself, I think they own, like, I think it's even less than 500 Bitcoin in total as a government holding.
It's more, I think it's the volcano bonds in terms of that is essentially a loan which is backed against future mining revenue, and if the Bitcoin price remains low, then that mining revenue is less than expected, and that inhibits their ability to pay that loan. So it's not to say that long term it won't play out to be a very good idea. It's just from the realities of finance, of assessing credit, it's not something which is necessarily beneficial all the time in every way.
Yeah. So let's play with the scenario then. For if we go back to Europe, let's play with the scenario. Let's say that this gets this should be implemented officially in April of this year. And then I believe it was because this actually, let's do this. The framework itself, it covers the entire crypto market, basically. It's not just, Bitcoin or not just smart contract platforms. It's basically everything, right? So that means that Europe is trying to get a framework that covers the whole industry from top to bottom. I know that as far as I've heard from discussions with I think one of the main guys from Polygon, ladies, and then one of the main guys from Circle were in a discussion with Bankless, I think it was, and they said that what's excluded from this is basically NFTs, not NFT collections, because it stops being non-fungible when they expand on a collection, basically. That's the way they see it, or the framework is seeing it. And then DeFi is kind of excluded too, because it's too early to start building around that. So they're starting with centralized stuff, right? So custodians, issuers, and all these type of things. So then that will have a framework, which means that with the centralized parts, exchanges, and especially custodians, if you're going to be a custodian, you're going to have a framework to work around, which means that if your customers, if you're a bank, are going to be able to, you're going to be able to create that product. So let's play with that scenario then. This comes through and entities across Europe start to develop products for their customers. What do you guys think that might be? Those type of products.
One quick note before we move forward.
Sure.
So apparently El Salvador now owns 2,381 Bitcoin.
Damn. Okay, that's more than 400.
Yeah, no, it's approximately worth 1.5 million. Or no, their last purchased amount was 1.5 million. And they purchased 80, and that was June 30th of last year.
Yeah, so like an entire nation putting in and owning 2,000 Bitcoin, that is not, a brutal amount of. But yeah, but for a whole nation,
for a nation that small though, that's
it's small.
41.5 million, and El Salvador is not exactly.
Wait, are you sure it's million? 41 million? Shouldn't it be more? Or am I drunk?
20,000 times 2,000 Bitcoin would be 40 million, right?
Yeah, okay, yeah, you're right. It's 46 million. Let's call this $50 million. I mean, $50 million is a lot of money for us, but I'm thinking how much money.
105 million to purchase everything.
Yeah, that's a big ouchie. And
it's big
what they should be doing, if I can say so myself, is lowering the cost basis, right?
Buying some more.
Buying some more.
And so I guess ideally that's what they will do. As part of the process of continually accumulating, they will accumulate while it's cheaper, and say long term, their cost basis will should be significant less than their outlay.
Let's be honest. If they bought, let's say they have an average of, what did you say it was, 105 million they've spent. So that means their cost basis is somewhere close to 42K or 45K or something like that. Ish.
That's
right?
a big ouchie.
Yeah, it's a big ouchie, but I mean, they're looking at this from the long term. So if you think in 10 years' time, that's going to be a really good price,
Yeah, but how do you manage to have a cost basis higher than Sailor?
Hey,
oh, Rob.
they're dipping their toes, right?
Yeah.
I think someone in their crypto sector may have pulled the gun a little too early.
Right. Okay. So let's get back to that scenario we were talking about. What type of products do you guys think might emerge through, after this comes through?
So I am seeing the potential for a lot more of digitalized holdings, as far as like basically real life assets being owned on a digital platform, being able to be sold more easily. I see a lot more of that kind of thing being popular, almost like timeshares turning into crypto investments.
Hmm.
That seems like a natural evolution out of where they currently are, because they need something to rebuff the idea, and this is potentially a very good way to do so.
Yeah, that could be something for sure. Could you, by the way, for the viewers, could you specify a little bit more what a timeshare is? Because I think there's not a lot of people
Oh,
that.
that's true. That's true. Okay, so a timeshare is basically investing in a company that owns a bunch of different plots or apartments or some kind of ability to stay at hotels. And because of your investment in that, you can then go and stay at all of their associated hotels and places for free or a severely discounted price.
Mhm.
Then you also are given a certain point system, and you can use those points for more free stays abroad elsewhere. Um, I know some people have invested in some where they are international timeshares. So that means they're not just inside the United States or just inside the UK or something like that. They can go basically anywhere in the world
Right.
and find somewhere to stay. I believe it's Wyndham has one. I think that's the one that I've been most informed on.
Right. So
Yeah.
it's not that complex. Okay, so then we know kind of how that would evolve into a blockchain type product, right? Okay, yeah.
Basically, if
That could
anyone
work.
wants to invest, I'm not going to say it's like an NFT collection, but it'd be as close as you could probably get to calling it an NFT collection,
Right.
because you're essentially granting people access to an apartment or some place, and you're
It's
using the
almost
same
like
basis.
a membership card. Hey, show me this, and you can stay
Yeah,
here. Okay, cool.
yeah.
Yeah, all right, cool, sure. Okay, all right, cool. So, Rob, do you think there isn't going to be anything new that emerges from this?
I think it's fun. I'm yes, of course, but I think it's kind of just it's another step towards that inevitable adoption path. And so what we'll continue to see is just more of the same. It's an opportunity for companies which have been on the fence to move into the pro crypto, let's start offering these services camp, and
Yep.
for some companies who are currently anti-crypto to move onto the fence and go, okay, maybe we'll start looking at this as a more legitimate asset class to invest in, because these rules are starting to be put into place.
Yeah.
One big problem that we've seen through 2022 has been there's no insurance in crypto. There's no protection when things go wrong. There's no bailout system. So by having an actual substantial set of rules, which means if you're trading stable coins, you'd better have those stable coins. Just as a perfect example, if you're trading, if you are going to partake in these activities, these are the rules that you've got to follow if you want to trade here. Whereas the US have just gone for no, everything's bad, we don't really want it.
Yeah.
And that's
We've seen
not
what's
a
happened
positive
there.
for the space. Yeah. So
Yeah.
this is the EU taking the first step in that game theory of pro crypto legislation versus anti-crypto legislation. Both have benefits and drawbacks, and there's the two sides, and as well, you can extend this to China, you can extend this to other nations around the world, all the way down to nations like El Salvador. They're all playing an adoption game about nobody wants, the nobody wants to be first and nobody wants to be last argument is, it's very, very true. The EU are now taking a big step, a big necessary step, and they're taking it first. That opens the door to a lot of people to follow.
Yeah, I think if I can make some, I don't want to say predictions, but in my mind, what I would hope to see happen is, well, first of all, I think the reason why Europe is taking the first step in this is because, first of all, I think we can all agree that they missed on Web 2 with the whole boom of the internet, all these things. Europe was kind of staying away from it. The Americans just stood up and said, let's fix this, and then they got in there, and you can see basically all major Web 2 companies are American made, right? And I think Europe kind of realized too late that, oh, oops, I guess we're gonna have to do something next time there is a chance, and now there is a chance. So that's good. But I think what might happen here is that, like I think I touched on this in the beginning of when I introed this whole thing, was what if you see these larger banks and everything starting to create these products where they say, oh, okay, we've created a fund. You can buy like an S&P 10, but it's like the 10 biggest cryptos currently, and they allocate, like, pension funds might say, oh, we can allocate 1, 2, 3, 4, 5% to Bitcoin holdings for our customers. So that's going to kind of open that up, because they will have this framework to look at. They will have the regulations to know how they can proceed in that. Because I know there's been a lot of talk around the world, not just Europe, but like United States and everything, that the customers are screaming for this product, but they can't make one because there's no regulations. So with that coming now for Europe, I think it will make a substantial difference in the adoption curve, at least in and around Europe, both for innovators and for businesses. I could definitely see some of the, like, if you want to start a crypto company or make a token and have a product, let's say you wanted to start XRP now, would you start it in the United States or would you start it in Europe? So I think, if you know how to actually do it legally and do it good, then...
And that's actually that point right there, knowing how to do it legally and knowing how to do it good.
Yeah.
That's why I think the MICA regulations, or at least the second form that we've been going through, is probably the most important, because it does clarify. I think it's from like around like roughly page 40 or so. It starts to tell you what needs to be part of the white paper, what needs to be part of what your crypto asset is involved with. And it wants all the specified details. It tells you nothing can be misleading. It even tells you that it needs to get approved. And this is basically detailing every single facet of what you need to have inside the white paper for it to be a good product.
Yeah.
Beyond that, they even have how you're supposed to be marketing. I mean, it's very detailed in regards to how to do this correctly and how they want you to do it to follow their regulations. And it's almost spelled out word for word. I mean, the titles are notification of the crypto asset white paper and, where applicable, of the marketing communications. And then it proceeds to tell you where you need to market it, how you need to, but well, not necessarily where you need to market it, but how you need to publish it. That way it meets their marketing standards.
Yeah.
And those are very important features that in the United States, we have nothing like that.
Yeah.
It's kind of like a free-for-all. You can post, say, do whatever you want, and you don't even necessarily need to have a white paper yet. Which is a little scary to think about.
And on top of all this stuff, right? Just think about what's happened with FTX, what's happened with, let's just use FTX. The European-based centralized exchanges will be as regulated as anything else, where whether you do stocks and whatever.
Bank level regulation.
Yeah, bank level regulation. So it's like FTX probably, hopefully, will not happen in Europe. Of course, things can still happen, and things can, scammers can do things, but when you have, like, and I don't even know if it needs to be. Let's think about this. I don't think it needs to be a European based, but if you want to have a license to operate your exchange, let's say Kraken, which I think is probably one of the best in my opinion, like in terms of security and all these things, and the people behind it. But let's say Kraken has, if they want to operate in the European Union, they will have to follow regulations, and they will be scrutinized very regularly by, whoever is in charge in the European Parliament for all these things and whatever. All these, there's like a 10,000, like every third sentence in this paper is like ECB this, SMA this, EPCA this. It's all these I don't know what they are, to be honest. But it's like
layers
they are
of
going
bureaucracy.
to be yes, and I think that will bring a lot of more security to centralized exchanges in Europe. Maybe not, it's obviously always going to be best to just hold your own stuff, right? But the level of security that will need to be added to these exchanges in Europe that wants to operate there is going to be much higher.
But it's and I understand. I know, of course, the whole not your keys, not your crypto malarkey is, yes, in an ideal world, in a perfect world, but where this magic internet money can pay for everything with everyone at all times, and we all live in harmony and hold hands, is kind of not very realistic next to the fact that people have assets and people want to borrow against those assets. And to borrow, you need an intermediary. You need somebody willing to accept your collateral in order to exchange funds. And for MICA it excludes DeFi, because DeFi isn't necessarily ready and mature to be included in this, but DeFi offers that ability in ways to borrow against your assets on chain. So these regulations need to really allow for CeFi to do the same thing, for you to be able to, say, custody Bitcoin with an intermediary who can be trusted under a suitable amount of scrutiny, and who can then enable you to say borrow against your Bitcoin, and you can trust verifiably that your Bitcoin is safe with that party. Yes, in an ideal world, you don't need to use an intermediary, but currently we don't really live in that ideal world.
Yeah, I mean, but I mean, imagine if so let's take the Grayscale Bitcoin Trust, right?
Yeah.
Currently, I believe it's Coinbase that holds that for the trust. And they've been kind of like, oh, we don't really want to show how much it is in there, and da da da. If and that's a big if, not really a big if, but if the MICA or whatever framework forces them to disclose these things, then at least that rumor that's been floating around that the Grayscale Trust is not necessarily actually backed by the Bitcoin that it says it does. I mean, they couldn't say, oh, we don't want to show it. It's like, you have to if you want to operate in this.
But does it have to be done? It could be done where, say, Coinbase show their proof of reserves and they prove to the regulators that these are the people who we hold and this is how much we hold to, and this can be this can be brought in and proven, and that then works as the Grayscale say we have 400,000 Bitcoin. Coinbase say here's all of our holdings, here's our customers' holdings, and this is Grayscale's 400,000 Bitcoin. Then that doesn't have to necessarily be publicly disclosed if Grayscale don't want it to. But by all of the regulations, it still follows that yes, they do hold every single Bitcoin that they have a claim to.
Yeah, sure. Sure, why not? I mean,
yeah,
I think that rumor could just be suffocated really fast. I mean, lot of FOMO and all these things.
Where's the fun in that?
Yeah,
where's the fun in that? Come on.
Well, yeah, that's very true. But what I'm saying is, like, a framework like this will eliminate a lot of FOMO. FUD. I think, fear, uncertainty, and doubt. In a lot of places where it's not. I mean, you're right, sort of right, but I think for mass adoption to happen, a lot of uncertainty has to disappear. So, yes.
So, yes.
Yes. Yeah. I thought you were both frozen on the screen for a while. I was like,
oh.
John was just staring and
waiting with bated breath.
Rob by your internet.
Yeah, you are right, and this is a big picture. This is a big picture grab for adoption, and it's beneficial. It is, it can only benefit, and it's a sign of confidence as well that they are seriously looking at this as an asset class and giving it serious regulation, because this this is now too big to be ignored, and this is recognized. It's clearly not being ignored anymore. So onwards and upwards.
Yeah, hopefully. Let's see. So again, I think we should be sharing these the links to these PDFs that we do have. If anyone wants to look them over, we have shared them in our Discord. They're very difficult to read. Not because the language is very difficult or anything, because you can get them in different languages too. If you're European, you can get it in Belgian or whatever, in French and everything like that. Problem is, it's extremely boring to read. So I'm going to try to read all this, and I do believe the papers we have is basically the proposal. The actual framework, as far as I've heard, is going to be about 380 pages. And I don't think they release that until April, so that you can read exactly what it is.
You have to remember, the first 10% of those is usually just, this is what we're doing, and here are the definitions that you need to know for the whole entire document.
Sure, it's still 90% of ugh.
I'm just saying, that's still 10% less. Right?
Yeah, and if you put it into what I did, I downloaded an application today where I put the PDF in, and then I tell it to read it to me at 50% faster, so at 150%, and so that's nice.
There's a very useful accessibility feature on iPhone, by the way. iPhone can do the same thing.
Yeah, I have an iPhone, but I couldn't find it. I think it only works on websites, and if you open a PDF, it doesn't work.
No, I think on a PDF it still works. You've got to swipe 2 fingers down, and it opens up like a.
Don't tell me. I spent an hour trying to.
You have to. Don't do it now. You have to enable it on your accessibility. It's on your accessibility options, but no. Just pro tip: if you take anything from this video, it is that you can get your iPhone to read things out to you. Logically, think about it. Of course, your phone can do that, and it's brilliant. So,
oh gosh, don't tell me that. No, but I downloaded an application, which is nice, so that it works. And I did notice, by the way, when I was researching this stuff, for everybody who's watching, if you want something that is text to speech, that is good, not like robot reading voice thing, it's good. It's expensive. I think one application was $300. I'm like,
jeez,
excuse me? No. I'll have Stephen Hawking read it to me instead, please. Thank you. For free. At least then it feels like I'm being told things by a very smart person.
I think that's one thing that in the next few years the marginal cost of a realistic AI voice will drop to 0.
Most likely,
I can believe that.
I can believe it too.
Yeah.
Okay, so with all of this,
regulations.
Yes. So so I guess the whole thing is going to be, there's going to be a lot of good stuff, and then there's also going to be some bad stuff, probably. At least short term, I believe overall regulations like this will be a net positive for the space globally, not just for Europe. The question is, once this is released, and like I said before, it's going to take about a year before stablecoins have to comply with it, and I think or something, and then so I think
18 months.
I think for everyone, for summer 2024, it's going to be stablecoins are going to have to comply, or stablecoin issuers like Circle and so forth. But then end of 2024, should already be doing.
So that's
I think most of these major companies actually like Circle, and I know that Circle and Polygon have a specialized person to understand exactly how they should comply. But I think
that's all part of Chapter 2. I want to say that's page 55.
Yeah.
Obligations of all issuers of asset reference tokens.
Yeah, precisely. So, but I think also there's the good thing about this if I remember correctly, again, I've been watching so many different things on this during the day that it's all super scrambled in my head right now. But so yeah, you're right. Liability of issuers of asset referenced tokens for the information in a crypto asset white paper. 55 is 54, and then chapter 2 comes in 55. Oh gosh. Okay, so but I think what's good about this is that a lot of crypto companies, such as Polygon and Ethereum people and so on, they have been kind of working and helping the regulators kind of figure out what would work and what wouldn't work. So I think even what's his name? CTO Larson. I think the Swedish guy, he's been, if I remember correctly, has been kind of sending and writing small pieces of proposals and sent them over to politicians in Europe to have a read over, and they probably have read it. So the more interest there is from this space where we are currently, us three and everybody watching this, the more interest we show to the politicians in Europe, the better. And I know, being Swedish, in Sweden, when we have our elections, everybody cares about the election in Sweden. But then when you got the European Parliament voting happening in the election, almost no one cares. It's like a couple of percent that actually vote on that, which is ridiculous because it's arguably more important. But I guess that's what happens, because I mean, if you compare it to the United States, it works very differently, right? Every country in Europe could be viewed as one of the American states. And if you live in, let's say, California, and you got elections there only, and then, oh wait, you got to do national stuff now, that people tend to not really care when it's too far from home, let's say. So I think something that everybody in the crypto space should do, if you are European, is to show as much interest in this as possible and try to reach out to politicians that are working on this, and give your thoughts. If you think something with this is really horrid or really good, then send them a letter or something. I know most people won't do that, but I think I probably will try to at least reach out somehow. I do have some contacts that I can reach out to. So yeah.
So, I mean, I'm sure even in the sense of how this will affect Sweden, even just literally how these assets are established and how it will affect even taxes or something along those manners, that could be quite a big deal for Sweden, considering how heavy things are taxed there, how hard it is to make a profit.
But the thing is, John, like the thing with Sweden is that it's very early on. Sweden went out and said profits in crypto is the same thing as profits in anything. So it's going to be 30% profit, end of story. It was clear as day, like really fast. Instead of having to sit around and be like, oh, how do I do this with my taxes, and then a lot of people skipped on taxes. Like, generally speaking, Swedish people tend to, not enjoy, but they want to pay taxes because we have it pretty good here, let's be honest. And one of the reasons is because we do pay a lot of taxes, but we have a very high quality of life. So I think there's not really an issue there as such, but if they make some changes, maybe they change it to the same way that when you sell a house or a property, you pay 22%. So if they could change it down to that, then I think I would be pretty happy.
No, that makes sense.
I always really, really enjoy it when Phil starts complaining about Sweden and the government, and I'm like, you live in the happiest place in the world. Please stop talking.
But you know my stance is that yes, we have it great, but when they do stupid shit, I'm gonna be annoyed.
Which is fair.
Just because we
You're
have
allowed
it
to
great.
be annoyed.
Look, just because we have it great doesn't mean that
it's still funny.
Just because, and this is important for everybody to understand, just because you have it great doesn't mean that you should be okay with politicians making bad decisions.
That's very
right?
true.
So it's like that's what it is. It's
still-
not like, oh, my life is so bad here in Sweden. Like, no, it's amazing. So go Sweden. Yeah.
Go Sweden.
So okay, so I'm wondering here, now that I'm wondering kind of what can be expected in terms of what's going to happen with the market short term, like when this gets pulled through in April. I think it's already priced in, right?
Well, so something like this doesn't have any effect day one.
Yeah,
zero,
precisely.
because there's no what it will do is simply it will begin the process of people having conversations about potentially starting to allocate to some crypto in the future now that they know how they can do what they can do. That's what it begins. So on day one, no interest, no difference. It's that cumulative additional capital which will flow in over a period of years, which this is another sort of step up in where sources of capital that's going to move into crypto, where that will come from.
Yeah, I would like to see a metric you can actually look at that would be interesting to keep an eye on in the next 2 years is the amount of people holding crypto around the world. So you could see like the amount of holders. I think right now it's like 3 or 400 million people or something globally.
I want to say it's around 300 or 400 million wallets.
Like
Actual individually held, not versus like someone that holds like a shit ton of different wallets, but like actual individual owners of wallets.
Yeah, I think that's correct. So what would be cool to see is maybe we can create this metric somehow. I don't know if Rob, you're pretty good at stuff, but if we could create like a chart that shows us number of wallets, like holders of crypto, maybe just Bitcoin, just because it's easier, because you're able to see that, and then create a chart that says how many percent that is growing every year, or every month, or every week from like a few years back, I suppose. But then maybe we are going to be able to see that ramp up in like going into like an exponential growth type curve.
So
with this,
just a quick Google search on this one. Yeah. Apparently 89% of American adults have heard of Bitcoin. An estimated 1 billion people around the world use cryptocurrencies, and about 46 million Americans, which is roughly 22% of the adult population, own a share of Bitcoin.
Right. Okay.
So I tell you what we can do.
We're gonna have to confirm those numbers, of course, but
I can just slap my screen on.
Yeah, sure.
For a sec. And so just very, very simply, this is the Bitcoin and the ETH active addresses. So currently the number of people actively using each of these, both of them combined. And so you can just stick something.
What is the time frame? The screen is a bit small for me. What is the time frame down there?
So that is weekly. So this goes back to July 2015.
Yeah, okay.
So if I just do stick a nice thick sort of 1 year moving average on, then so you can see you get periods of these
spikes. Yeah, that's the exponential moves probably.
And here you go. It's quite interesting to see another metric that shows the peak of the bull run was April to May 2021. It was not November.
Yeah.
Bitcoin managed to make an all-time high in a bear market. That's how crazy Bitcoin is.
Very true. Very true.
And so, but we are starting to see a clear resurgence in the number of active addresses. Now, is this a sustainable rise? Is this a move? Is it going to be a move like this where it's short-lived and then we see a reversion back to the mean? That's kind of what I'm expecting, is some sort of move like this, like we got in 2019. But who knows? There are fundamental.
You said this is active addresses, right? Okay. So yeah, I think this metric could be a little bit skewed in terms of what kind of information we're looking for. Because if we're looking for adoption. Like for example, if my mother were to acquire Bitcoin through her bank because she wanted to, have some Bitcoin just for Bitcoin's sake, then obviously she would acquire one, and then that wallet would be dormant after that for quite some time.
Here's the total addresses. It's a bit of a more boring
perfect.
chart.
Yeah, it's showing us what we want to see, right? Which is growth.
Yes and no. It kind of depends, because there's two sort of sides to Bitcoin's narrative, or cryptocurrency's narrative. There's the store of value side, which wallets don't have to be active to be active as a store of value. And then you've got the transaction, you've got the volume and liquidity side of the actual the crypto that is moving, and it's the moving crypto in the system that actually dictates the price, not the Bitcoin that's being held dormant is only really contributing to the lack of supply.
Yeah,
but the price is determined by the active Bitcoin. How is that trading and moving around the system?
So my question for you, Rob, real quick, can you see those roughly like 3 individual peaks? There's on
the previous chart. Sorry,
no, on this one right here.
On this one,
they're very, very tiny peaks. So it's like, yep, right there, and then a little bit over to the right.
So we got,
and then
we got one there, and then one further up.
Yeah, right there.
Yeah, I think that would be.
Yeah.
Where do those line up with on the previous chart?
Yeah, if you can put it in compare, yeah. No, it's kind of fun because what I was searching for in terms of what we would want to see is once the MICA framework is there, then once it's there, what will happen to adoption? Will this curve become steeper? Right? Like if the rate of adoption, is that going to be, if you can see somehow how that's ramping up in speed?
I could, but it'd take me a bit of time just to.
We don't need to do that now.
I'm just right now.
What I'm saying is it would be kind of cool to have that kind of chart to look at in the future, where we could kind of see if the MICA regulatory framework actually did help with adoption. If you could see like a ramp up of speed, so it becomes more steep once it's put through, in the next 2 years, if we see it go faster up, then especially if it's without Bitcoin going on an exponential move, because once that happens, usually there is a adoption happens much faster at that point, because people start FOMOing in, and beginners start to come in towards the end of the peak, and they start buying because they think it's going to go to $62 billion or whatever.
I would just to kind of point out, so this is on the linear chart, so it's a mildly exponential sort of trajectory, but it's not. Since 2015, it's been fairly close to linear growth.
It really has.
So this is total addresses, not active addresses. The active addresses you can see in the orange, and there are spikes that correspond to these pickups. That one, for whatever reason, there's a load of addresses that did something there.
Yeah, but I mean, if you look at towards the end here, you see how active addresses has gone sideways while new addresses are kind of just growing. So it's like, okay, that tells us that adoption is still happening. Meanwhile, active trading, I guess, is going slower because.
Wait, is this both types of wallets, Bitcoin and Ethereum?
This is Bitcoin and ETH, yes.
Okay, I wonder if there is some kind of surgence for that early one that would kind of like a marketplace opening up or something like that. That just a lot of wallets were created.
When is
all
that?
At once?
Yeah. So that is October 2016.
Okay, so but a while back then.
I don't know. But so either way, it's like, I don't expect us to see a step change overnight as a result of regulations.
No.
But it is and even so, the actual number of this is kind of where wallets, the address is maybe a bit of a it's not something that you should look at directly, because we're talking about, as you say, Phil, capital going into this asset and then sitting there, not being used. It's simply taking a finite asset, removing it from the system, and saying the amount that the value that is determined by this asset. I've got my cost basis, and I don't care what it trades at anymore. You can do that with your active addresses.
Right. Yeah, no, it takes it takes a lot of thinking when you start looking at charts like this. What is it that you're actually searching for, and is this metric actually a viable option of getting
Finding
you that information? Yeah. And I think there's a lot of people out there, unfortunately, that they look at a chart of something and they assume that that's telling them X, Y, and Z, even though it's just telling them X. And that's something I think at least when we do our shows like this, we can be at least a bit vocal on it, right? Because the more information people have, the better for us and for them and for everybody, I think. So,
and there's no guarantee that just one chart is going to be able to tell you everything that you need to know. That you may need to look at like 50, maybe 100 charts to be able to get all the information you need.
Luckily, Rob is the chart guy, so he looks at 60,000.
You've got to pump those numbers up. Those are lucky numbers in this game.
Oh yeah, no, Rob is the chart guy, so we just lean on Rob for everything. It's like, hey Rob, can you look at this thing for me and tell me if I'm right now? I'm not really, but you are obviously the most versed in that type of stuff. Trading View is his middle name.
Let me see what the tea leaves tell me.
Oh yeah, of course. All right, well, so let's see if we can. Actually, I feel like this discussion has kind of covered what I thought we were hoping we were going to do. I know that both of you have to kind of get going soon, because
I got a bit of time. There's maybe something else to touch on is kind of the effect that this will have on DeFi. In that,
let me guess, do you have a chart?
I don't have a chart, that much of a chart. This is actually, this isn't necessarily the chart. This is the chart. The total DeFi market cap, which, yay, look at that. That looks. Do you think the bubble popped, guys?
I can't really tell, but did it go down?
But on the log chart, it's very, very consistent growth. Yeah. And you have a consistent.
Is this like a trend. TVL thing or something?
No, this is the total DeFi market cap. So just for all of the DeFi.
Oh yeah, okay,
cryptos,
okay. I get it.
It's sure. And you can see there's just sort of regions of this is a very, very classic sort of distribution then accumulation phase, and this is for the total DeFi market cap, right? And you can see a lot of this valuation has gone out of the dog shit and the scam coins and the yield farming and all of that stuff, and it's now funneling into the real quality DeFi plays. And as these regulations come in and as they start to impact the CeFi space, which the CeFi space will lead because it's where the trust is, it's where the establishment is, where the people who have the money, they ain't looking at DeFi, they're all CeFi guys. So that's going to get the first effort. But
for sure,
that is still going to open up much more opportunities for these companies to start to really make use of this space. For companies like Aave and Compound, these lending platforms that have, throughout a year of liquidations and insolvency and bankruptcy, these things have been bulletproof. I mean, Aave, for the ability for that to handle all of the liquidations that was going on in ETH. This didn't exist in 2018. There was no lending platform with sort of $10-20 billion or whatever of available collateral for borrowing, and that's handled a 70-80% drawdown with flawlessly.
And nothing
we've
wrong
seen
with it.
So we've seen in the last year the weaknesses in CeFi. So if they fix the CeFi options, great. That's a big plus for the industry. We've seen we need this regulation, and the EU have clearly noticed this and they've recognised this is needed. But it also, if it will inevitably lead to a new adoption curve, and DeFi is something DeFi really pumped in, it pumped in 2021 along with everything else, but it really got going in sort of 2020 as a class. So, the yield farming stuff was very early on in the cycle, and then kind of died off in terms of other narratives, things like Luna, which was so much safer,
right?
Better.
I mean,
yeah. So
what do you think then? Are you thinking that once this framework comes through, CeFi is going to get a lot more adoption, like general adoption of crypto is going to happen? But then, do you think? I think you would agree with me that I think a lot of this is going to roll over into DeFi, because DeFi is probably going to be the standard, hopefully.
Slowly at first, and then quickly. It's going, one company would say nobody wants to be first, nobody wants to be last. It could be one bank, Goldman Sachs go, okay, we're going to start offering DeFi to our customers. We're going to actually enable people to have a savings account where we give 3% because we've got 4% yield on stable coins. Yeah. And customers, all of a sudden, it's like, well, wait a minute, I can get a 3% bank account using crypto. Yeah. And because it's regulated and because it's backed, there's the actual option for offering real yield to people, because there are actually sustainable products which offer these kind of sustainable yields.
Yeah. So in essence,
will be looked at.
In essence, DeFi will kind of replace banking. In a lot of aspects. I would say,
or banking will co-opt DeFi. Banking will essentially banking will simply look and go, if I'm offering a product which is I want people to store their money with me. What do I do with their money to generate yield for them? And this will be something which will offer. It'll make a huge availability of capital. That capital will then be able to be lent out to people who have got who are over collateralized, because it's a DeFi lending platform. You've got to have a high LTV, and as that as the amount of money gets made available and the amount of money gets lent out, it's essentially a free money maker that they don't even have to issue loans. They just have to take people's money and give them a yield and operate as a middleman. They don't have to do any work.
Yeah, that's very true. Okay, so there's one thing. I know I'm hopping between kind of subjects here, but there's a lot of thoughts behind this. But so there's one thing I kind of want to finish on this one. In the framework, as far as I could tell, there's going to be a limit, and I think this is something that the Europeans are doing because they want to kind of protect their border, sort of, where their currency, the euro, right? So in the framework, if this is correct, and if this is put into the actual framework later, I don't know yet because it's not out, but it seems like for stablecoins, they will be saying that $1 million per person can be transacted in US dollar and non-euro stablecoins per day. So $1 million per person per day can be transacted.
Oh no, I'm screwed.
Yeah, me too. Oh no, I can't do it. And then for the euro, it's going to be 200 million euros, which means big entities are going to be able to still move stuff on the euro. So my question or my thought is, does this mean that the euro has potential to become fairly strong if mass adoption actually happens of cryptos and stuff like that in Europe, first of all? Does that mean that the euro can become a very strong currency in comparison to short term, midterm, long term?
I'm going to say no. Simply because it depends, maybe long term, but I really don't see it, quite simply because the ability for stable coins to have sufficient liquidity to really impact the market in that way, there's not enough liquidity, and there's not enough currently there's not enough ability to put that liquidity in. There aren't enough euros. Like there's not enough. How do people get, say, what, 5 or 10 trillion euros worth of capital into the crypto market? Like, what are the mechanisms for holding that amount of capital? You're looking at a huge amount of government debt. So unless there's a huge issuance of government debt, which is not necessarily unlikely, but
I guess what
you need a vessel to hold that amount of money.
I'm going to say that I don't think that it could become very strong. I think it has the potential to, as Rob said, long term gain some credence and gain some ground. I think it would be honestly one of the best ways for them to provide an opportunity and a stepping stone for the euro coin or a CBDC of some type. I don't necessarily think that the euro is going to. I don't think that it has quite the ability to do what the market needs it to do versus some other new creation that sidesteps it and kind of overtakes it.
As well,
what I meant with this is like the euro for someone like me who my salary comes in the Swedish crown, and all these things, and a lot of the time I buy the dollar with it because it's just a stronger currency overall. And so when I read all this, it kind of made me think maybe it's worth for me to buy euros as well, and not just the dollar, because maybe not now, but if the euro gains a lot of strength compared to maybe other European nation currencies, then rolling some of my Swedish crowns over to euros and dollars, not just dollars, is probably not a horrible idea. And in my mind, I might be wrong. I'm not like a currency expert or anything, right? So it's just that type of thinking that I had from it. And Rob is frowning.
So like with the reserve, the Fed,
just buy Bitcoin.
Oh, well, yeah, obviously, but I rolled it into stablecoin.
Yeah, no. This is the thing on the big picture. This in the big picture, this is kind of irrelevant. It's in anything other than a very long term view. On an equally long term view, I would like to think that, given that you run a goddamn channel called Crypto Talks, on the long term view, you are more bullish on Bitcoin. Yes. You are on the euro, and
of course. But...
therefore, within the time frame that we're talking about this making a difference to the euro, it will also have made a difference to Bitcoin. And the thing to bear in mind that it is dollar liquidity that is driving these global markets. Of course, the dollar is king, and so
of course,
this, in terms of what this will bring into the euro, it might say it shoved $1 trillion from the dollar into the euro. Cool. Yeah, that's gonna move it a few percent. It's a few percent though. It's like literally would be a few percent. It's not going to be.
Yeah, for sure.
The euro's not going to.
Can we expect to see more stablecoin issuers issue a euro-backed stablecoin? Right? Because I know there's like true GBP.
Yeah.
GBP. I was like, wait. And there's true euro as well, I think. But stuff like, I think
true GBP it exists, but it's barely traded anywhere. It's so hard to use.
No, but what I'm saying is that we might start being able to see more trading pairs or easily accessible trading pairs against the euro, maybe. Which is
that's good. That is good. That's kind of what
thing.
What we should be able to have that as a It's good to have the liquidity in multiple currencies, because it means that, say, we don't have to. I understand what you're saying, in that if we are more bullish on the euro than the dollar, then yes, it'd be nice to be able to trade euro pairs instead of dollar pairs. I've done that on Kraken before, and there's a liquidity on some euro pairs really isn't great, and GBP pairs as well. It's just not there. So can this increase the liquidity? Definitely. Will it? Definitely. Over the time frame that we're kind of talking about, then yeah.
I think it's more like
will it? It's a long-term bullish.
I think what you said there is like, will it? Yeah. And all these things, and then the third would be, do we care? Not really.
Do we care? This is like, as in, do we care in terms of, is this good for the long-term picture of crypto? Yes. So yes, we should care. Like we do care, but
in that sense, yeah.
What does it in any way change my investment thesis? No.
It's like, I don't care if I have to buy Bitcoin with dollars or Swedish crowns or euros. I don't care, as long as I can swap shitcoin for something like Bitcoin.
I buy them in pounds. Why? Because the people I work for,
that's what you
every
get paid
month,
in.
They put some pounds in my bank account. So yeah, I buy
precisely.
Pounds.
Yeah. So that's great. Any thoughts on that, John?
Honestly, I'm in the United States, so
I know.
Across the board.
America, I don't care.
Yeah, it's like, I'm just gonna be buying Bitcoin, like Rob said. I'm not gonna suddenly be like, oh, let me buy some euro.
You know what I really want to start doing now? FX trading, because the world is so stable.
Okay, great.
All right, now, awesome. I mean, if we're doing some FX trading, I may buy some like Thailand bot, but that's just because I go there.
I mean,
buy it while it's low, so you can have a better price when you get back.
Yeah, sure. Okay. Well, okay, guys, I think we can wrap it up here. I don't want to keep y'all for too long. I know both of you got to go, and I kind of need to continue reading this super boring paper. And I need to finish. By the way, we promised when we did the project deep dive on Blur last week, we said that we were going to release a report, like paperwork, and we're still working on that because, to be completely honest, none of us are like writers. So we're trying to make it sound nice and fancy and all these things, or professional, and it's hard.
We don't do words goodly.
No, Bitcoin is education is important, but Bitcoin is importanter. So we.
This might be needed to get peer reviewed, so we'll see.
Yeah. All right. Well, cool. So we're gonna wrap it up here, and we'll see you next week. Make sure you guys subscribe, follow. Well, subscribe. Yeah, do follow us on all the social media things that we have. Because look at the banner below. There's everything there. So subscribe, like, put the notification bell on, and follow us and everything, and then
share us.
Join
with your friends.
Yeah, tell everybody that you've ever met in your life. Go tell them, personally, like, hey, follow these guys. Like, just go find them.
No, follow Crypto Talks. Make sure you say follow Crypto Talks. That's what we need.
The best thing with people in it of all time ever.
But please do join our Discord if you'd like to talk to us more outside of this.
Please do, because we're sharing like all the stuff that we read that we find to be actually important. We share that with everybody, and we kind of have small discussions about it in real time, either in text or in voice chat, because we basically live inside the Discord. Like, my house is in there, I swear. True story. It's like Tron, I get pulled into the software. All right, cool. So we're gonna finish this here. And we'll see you tomorrow. We got TA Monday with me and Rob.
Tomorrow?
Well, no, it's not tomorrow. On Monday. TA Monday. See, this is how much I work. I have no idea what day it is. Nothing. I don't even know my own name. All right, cool. So we'll see you on Monday, everybody. Bye.
Peace.
Bye.